So in this video I want to perform a simple valuation of the NVIDIA stock based on ChatGPT-4o. So I will just let ChatGPT-4o do the heavy lifting in order to test its capabilities. Okay, so first of all I upload the most recent annual report of NVIDIA as a PDF, so it has some information. There are more recent quarterly reports, but I just want to keep it high level. So this is like not investment advice, I just want to check out its capabilities. Okay, first of all, we ask it to research the investment case for NVIDIA. So let's see how it performs like a big picture, whether it can provide a big picture overview of NVIDIA's general direction where it's headed. Okay, some key aspects. It identifies based on the annual report that NVIDIA is a financially very robust company, which is already great, right? So it can read and understand the financial report. It could also be a garbage company, but it understood based on the report that it has a significant revenue growth, it has great profitability that is above average, and operating income increased by 681% year on year. It identifies the concrete number, the $33 billion number. It found out or determined like the most important piece of information. So if you are not an NVIDIA expert, you might not know like relative, what is the biggest segment in NVIDIA, what is, for instance, data center revenue versus gaming revenue and so on. And based on the report, it automatically pulled out the most important piece of information, that the data center segment is the main driver of revenue. It is the main thing to value NVIDIA. It identified that NVIDIA is a leader in accelerated computing for AI and data centers, generative AI, even healthcare and life science. It identified platforms such as NVIDIA Clara and BioNemo to revolutionize healthcare and so on. It found the interesting future markets such as gaming. Okay, this is a minor market in my opinion. Automotive. I mean, gaming could be huge, right? But I think AI or AI revenue will kind of smoke gaming revenue. Automotive could be a significant revenue driver of NVIDIA for NVIDIA chips, because AI training and AI inference are huge for the automotive sector. So if you have a lot of inference, we also have a lot of training. You can check out our other Finxter videos that show that if you want to fast inference, you actually don't need, you should not spend more compute in inference, but you should spend more time on training. And this is very counterintuitive. Many people don't get this. And this is called the training inference trade-off in AI. So if you want faster inference, we need to spend more time on training, because we can make the model smaller in the training phase by spending more compute in the training phase, and which is like plays to NVIDIA's strength, of course. Industrial digitalization, it identifies the NVIDIA Omniverse. So I think it has, like, already in a single prompt, it already showed an above average understanding of the company. Like this one prompt already shows that it is like a better analyst than most people, I would say. So in a way, it already passed the Turing test for financial analysis, right? But we still want to have some numbers. We want to like maybe understand NVIDIA's view on the valuation of NVIDIA. Is it overvalued or is it undervalued? So we need to do some financial analysis. I think a simple query would be to just ask it to give us a rough math fair value given the information provided in the report. And this is still outdated information, right? This is like the most recent financial report, but there's like one or two quarterly reports in between. So yeah, to give us a first rough math valuation, it uses the GAAP earnings per share, which is like $11, and just adds a PE ratio, price earning ratio. He says, okay, technology sector PE ratios can vary, but let's assume an average PE ratio of 30 for the sector, which I think is maybe too conservative, but okay. This is the general impression I have. ChatGPT-4o is too conservative, although 4o is much better than most other models. So most other models are way more conservative and do way more hedging. And even like the previous model, ChatGPT-4 and ChatGPT 3.5 and so on, those were much more conservative, much more defensive. And I think ChatGPT-4o at least gives us a valuation, right? Many models actually don't do this. Okay, here it just takes the EPS, 11.93 bucks, and multiplies with 30 to give us a fair value of the share price of $357. This is pre-split, so before we had the split, so in today's dollars this would be 35 bucks. So if you look at the NVIDIA share, it's currently at 129 bucks, and it gives us 35 bucks split adjusted. So we always need to divide this by 10 because each share, based on the date information then, would be 10 shares now, right? So the value would be 1/10 of this share price. So 35 bucks, and the real value is like 129 bucks, which would indicate that ChatGPT, based on this rough math, rough overview, would believe that NVIDIA would be overvalued. And if it uses a non-GAAP EPS, the picture stays the same, right? It would be like 3x overvalued or so. But here, in the third point, it found out, so it determined that NVIDIA's growth rates are significantly higher than average in technology. So they actually suggest a higher PE ratio, which is good thinking, good argumentation, right? If you apply a more aggressive growth-based PE ratio, say 40, they multiply the earnings per share with 40 to get to a $518 stock price, or split adjusted 51 bucks stock price. Again, today's stock price is 129 bucks, so it would deem NVIDIA overvalued based on these assumptions. Good. Let's maybe have a bit follow up because currently it only uses the information from the report, which is already outdated. So let's ask it to actually access the web to research more recent numbers and update the valuation based on the recent information. Okay, so let's read it. The current stock price. Okay, it pulled the stock price. It pulled some analysis price targets. Actually, I don't want it to get biased by the analysis price targets. I would like to remain independent with this analysis. Yeah, it found out that in the most recent quarter, the sales tripled and net income even increased. So they project that NVIDIA will earn around 24 billion in the first quarter in the next year, right? So if you earn more, then they would. Okay, but here it didn't actually. Yes, so it still used it. It still applied a higher growth rate, right? So actually, they didn't change the valuation much. Probably this was due to the share split. So let's maybe ask it or give it the update. There was a 10-to-1 stock split. Please adjust your numbers and redo the PE-based analysis. Okay, so now it gives us this analysis is updated analysis and gives us for the high growth scenario PE ratio of 40 and like a 50 fair value of 51 bucks per share. Okay, so this is not too bullish on the current valuation. I mean, ChatGPT is still bullish on NVIDIA overall. It thinks it's a great company, but it believes that it's like more than that it's more than 50% overvalued, basically. So that the fair value is like 40% or so of the current market cap or of the current share price. So it would not buy NVIDIA, right? It would not recommend to buy NVIDIA. But let's maybe have another perspective on this valuation. It's always good to have multiple perspectives. So this PE-based valuation is not the only way to value a company. You can also have a top-down valuation, for instance, of NVIDIA. Let's try this. Okay, so first of all, it gives us like a global economic outlook. It assumes that the global economy grows by 3% every year, and it assumes that the technology sector will grow like by 6 to 8% every year. The semiconductor market will grow like at a compound annual growth rate of 7.7%, and the AI market is assumed to have a compound annual growth rate of 42.2%, right? And NVIDIA is like both a leader in those two markets, so they now use these big picture growth rates to identify the growth of the market, and then it identifies based on, if it knows the size of the market or the expected size of the market, it can now maybe use a market share, an assumed market share, to figure out the revenue of NVIDIA in the future, and based on this it can then give us an expected valuation of the current stock price. And this is like what normal analysis would do, right? It sees that NVIDIA's revenue grew by 126% year on year. So maybe let's quickly check this number, reaching 60.9 billion. So revenue NVIDIA. Financials. Here you see revenue in April, so in the last, this is quarterly financials. Do we also have annual financials? Okay, so in the most recent quarter we have 26 billion revenue number, and if you multiply this with 4, we roughly get to this number. The data center segment, actually we get a number that is larger than this, but maybe they assume that the revenue growth was not persistent. Actually, I would say, okay, no, this is like looking back the 4 most recent quarters, which makes sense then, 60 billion, right? If you have say 26 billion plus 22 billion plus 18 billion plus 13 billion, this should be like roughly 60 billion. It looks reasonable to me. Of course, one would have to confirm this maybe first. Earnings growth, net income soared to 12 billion in the most recent quarter. So they already have the stats here of NVIDIA. Now they look at its strategic position. They determine that NVIDIA's GPUs are the best GPUs out there. They have many different applications building on top of those GPUs. So as valuation models, they could use a discounted cash flow analysis. And the DCF calculation gives us 12.29 billion base year free cash flow for 2024. And now they use a projected growth rate. And what's the fair value? Again, we have the $38 per share, $51 per share. And the NVIDIA's estimated valuation for the whole company would be between 300 and 400 billion, which is pretty bearish in my view. Okay, so let's maybe ask it to do a simple DCF, discounted cash flow analysis for the next 10 years, or based on the assumptions for the next 10 years. Maybe we can get something out of this. Okay, so but we already got a lot out of it, right? It gave us the core information about the NVIDIA business, and it also gave us like a truthful valuation based on its own assumptions of NVIDIA, and it thinks NVIDIA is currently overvalued. So maybe if you would trust ChatGPT with this, you wouldn't buy it. And many financial analysts actually would also agree maybe with NVIDIA. So we need to. I'm much more bullish on NVIDIA than ChatGPT-4o based on the information it has. But this doesn't mean I am right and it is wrong. It can be like it could also be right and I am wrong, right? So I think it's good exercise. Here now it gives us a beautiful table for the step-by-step discounted cash flow analysis or calculation for the 10 years in the future. It look at the revenue growth rate. It implicitly assumes it starts with 20% in the first year and then going down to only 10%. So this is very conservative valuation. In my opinion, like the revenue growth rate will be like more like 40% or so. But we can adjust these assumptions later on, right? But first I want to have like a conservative base valuation, so I know the risk in the stock. Maybe if things don't turn out so bullish as we expect, I think they will turn out probably even bullisher, like than having a 20% average compound annual growth rate in the next 10 years. But let's see. Okay, in these scenarios, we would have the revenue of 204 billion and operating income of 116 billion. This is like more than Apple makes today, more than Microsoft makes today in operating income. So free cash flow discounted back to the present would give us a 43 billion contribution. So this 116 billion cash flow in the year 2033 is only worth 43 billion today, because it's future cash flow, it's not today's cash flow. Future's cash flow must be discounted, must be reduced, because future cash flows are not as valuable as today's cash flows, because today's cash flows you can invest today, say in an index fund, an ETF, and get some yield out of it, right, for 10 years. So they use a 10% discount rate, which is also pretty conservative, and based on this, they now calculate the terminal value. The terminal value, they use the free cash flow in the year 2033, which is 43 billion. No, actually it's 204. No, this was the revenue, right? The operating income was 116 billion. Okay, but they used, what did they use? The free cash flow. Yeah, this is the discounted value in the year. So they use this value here, the today's value of the future cash flow, and multiplied it with the growth rate, and then adjusted to find out the terminal value, because now the cash flows will go on, right? And this is just a formula for the terminal value, because now we need to sum over all these cash flows, and then also the terminal value, so the future cash flows from then on. And this is basically 642 billion, and then it goes over those cash flows. No, actually this is not the present value, it's the free cash flow. Okay, sorry about that. Sorry, no, I was a bit confused. So this one is actually not, this is the operating income, but the free cash flow is not the operating income. Free cash flow is less. And then the today's value of this free cash flow would be even less. And this is what they calculate here. So they calculate this like 17 billion would be the today's value of the future 43.7 billion cash flow. That's why I was a bit confused previously. Okay, they give us a total present value of the cash flows is 398 billion. So based on this, we have the terminal present value of the future 642 billion is only 247 billion. So based on this, they give us a fair value of NVIDIA of roughly 400 billion, because they don't really buy the high growth rates, right? So now we know why it is so bearish about NVIDIA. So 400 billion, let's look at market cap of NVIDIA today. It's already 3.18 trillion. So we have almost 10 times the market cap. So it would say NVIDIA is significantly overvalued in this case. And it could crash by, say, 90% or so, or 85% to reach its current, to reach its fair value, basically. Now let's assume 40%. And this is not what I recommend, or what I think is necessarily will be true. We need to stress test different scenarios. Now let's assume a 40% CAGR in the next 10 years. Because we need to figure out why the market is currently assigning a 3.18 trillion market cap to NVIDIA. If ChatGPT-4o, based on no human added context, assumes that the fair value of NVIDIA market cap would be 1/10 or so of the current market cap. In this case, if you have this 40% revenue growth rate, we of course get significant revenue. And so we would have in the year 2033, we would have a 1.2 trillion revenue, and the operating income would then be very significant. Free cash flows would be very significant. And in this case, it would calculate the terminal value that would have then to be discounted back to the present. You can see this here. And in this case, if we add overall future cash flows discounted back to the present, we would get a fair value of 1.9 trillion, which is still significantly less than the current market cap of NVIDIA. And this, so this is, I think not very bullish for NVIDIA shareholders, right? So they should maybe consider the possibility of a significant overvaluation of NVIDIA, because having a 10-year 40% compound annual growth rate of the revenues would be very hard to do, right? But then again, you also need to be aware that oftentimes companies are not valued based on the free cash flows, but based on the net income. And the net income would be higher, right? It would be like more on the 600 billion or so. So what about if we use net income instead of free cash flow? It's just experimenting and prompting the model to give us more and more insights. Because oftentimes it's not like, I think the best way to value a stock now is this ping pong approach with ChatGPT, asking it different kinds of questions, giving it different. So a human person alone, I think, is inferior to a human with ChatGPT as a tool. This is similar as a human grandmaster chess player is inferior to an average player with a chess engine, right? With a powerful chess engine at hand. So I think this levels the playing field in a way, so all of us can now participate in these kind of valuation games. And I think we all get reasonable valuations based on this, right? So this gives us a per share valuation of around $700, and split adjusted, this would be like $71 or so, right? So $71 still would indicate that NVIDIA is overvalued. So basically ChatGPT-4o, let's just make a point here. Let's end this with the important takeaway that ChatGPT-4o believes NVIDIA currently is significantly overvalued. Maybe it can even give us a statement. So do you believe NVIDIA today is overvalued or undervalued? Okay, so it figured out the stock split. It figured out the 10-to-1 stock split, and its fair value estimate is it would say this undervalued, but I think so this fair value estimate, so here we discovered a bug, I think. So the fair value estimate gives us $718 per share, but the $718 per share, it used the wrong number of shares, the 2.6 billion shares, doesn't it? So if you have NVIDIA number of shares outstanding, we get 24 billion. So we have 24 billion shares outstanding. Here it used 2.6 billion. Okay, so let's update it with this information. NVIDIA has 24 billion shares outstanding. I mean, at least it understands it very quickly, right? It's a very great learner. It incorporates the feedback. It understands what I mean. And the total company value here is 1.9 trillion. This is the value, not the price. shares outstanding is 24 billion, so now it gives us a fair value per share of 80 billion. And of course this changes everything, right? So it was a bit confused by the stock split. So the fair value estimate would be $77 to $80 per share. The current market price is $134 per share. So the current market price per share is significantly higher than the calculated fair value range of $77 to $80 per share. And in conclusion, NVIDIA appears to be overvalued. And even with the growth assumptions, the analysis assumes a 40% CAGR, which is optimistic. Real world performance could vary. Of course, it could be less. Market volatility, competition and risk. And yeah, I think it's a good takeaway, right? It's a good takeaway. ChatGPT-4o believes NVIDIA is overvalued, even significantly overvalued, and NVIDIA would have to like prove, so for a few more years maybe, that they can even beat 40% compound annual growth rate during the next 10 years. I think it will, honestly, but I also understand that that's a very bullish assumption, and that you need to have this extra bullishness to be confident about this updated assumption. And somebody, like, if they don't do the research, I think you should not assume higher than 40% compound annual growth rate of almost any industry, because usually it's very unrealistic, right? So most companies would not be able to accomplish such a high compound annual growth rate over 10 years at this size even, and at this revenue level. I think NVIDIA will, but I mean, I think this because of a lot of research I did and because of being in the industry. And I still want to highlight that this is my own assumption that could be wrong and could be significantly overvalued, right? And yeah, that's why I think it's a good takeaway. Let's make this point. Thanks for watching this video. If you want to stay on the right side of change, stay updated with the most recent developments in AI and in the investment space, then give me a like and subscribe to the channel. I appreciate having you here, and let's talk in the next video. Bye.